Hello everyone, my name is Ashish. I am from Mcom Part 2 Semester 4 and today I'd like to briefly talk about operating lease as my topic for the assignment. So first things first, let us understand first actually what actually is lease. So what is a lease? A lease is an implied or written agreement specifying the conditions under which a lessor accepts to let out a property to be used by a leasee. The agreement promises the lessee the use of the property for the agreed length of time, that is the period, while the owner is assured consistent payment over the agreed period. Both the parties are bound by the terms of contract and there is the consequences that they'll have to face if they fail to meet the contractual obligations. So let us understand what is lessor and lessee because they are the two terms that are used. In the contract of a lease, the person who is the transferor of the property is called the lessor, and the person who is the transferee is called the leasee. Both lessor and leasee can come into a contract of lease for the transfer of rights of immovable properties that are mostly tangible. The person acquiring the property in the form of a lease can work on the property and share the profit gained by it to the true owner of the property. Lease is a contractual relationship between the lessor and the lessee. Therefore, the essential elements of a valid contract are necessary to be fulfilled, and the party should be competent to the contract according to the Indian Contract Act 1872. Equally, there are different types of leases. The most common type of leases are absolute net lease, triple net lease, modified gross lease, and full services lease. The tenants and the proprietors need to understand them fully before signing the lease agreement. Equally, there are huge benefits of property owners and tenants if they engage real estate experts during such agreements. Real estate experts are the best people to talk to as they can give the best advice when leasing agreement. So I'm not going to explain everything in detail, but the main gist of the elements of the leases are: so the party, subject matter of the lease, duration of the lease, consideration, sublease. So let us understand what are they. So parties are the lessor and the lessee, the two subjects that are involved in the agreement. That can be landlord and the lessee will be the tenant. So subject matter of the lease. Subject matter of the lease is the immovable property under which the lease is agreed upon. So duration of the lease, as the name suggests, is the time frame from which the lease agreement has been carried out. So let us understand what is consideration. Consideration for lease is premium or rent, which is paid, which is the price paid or promised in the consideration of the demise. So the premium is the consideration paid of being let in the possession, even if it is paid in installments. So what is subleasing? A leasee can transfer the whole or part of an interest in the property by sublease. However, this right is subjected according to the contract to the contrary, that he can be restrained by the contract from transferring his lease by subletting. The lessee can create subleases for different parts of the demise party. The subject lessee gets the rights subject to the convenience, terms and condition in the lease deed. Now let us understand how many types of leases are there. Based on the nature, there are two types, that is operating lease and financial needs. Based on the method of lease, there are three types, that is direct lease, second is the sales and the lease back, and third is the leverage lease. We are not gonna understand everything because of the time crunch, hence I'm gonna be focusing on operating lease. That is my assignment. Now coming to my assignment, in the operating leasing, the lessee does not hold the burden of the property and the lessor takes care of the property. This type of lease is for a short period of time. For instance, if a person transfers the property rights to another person in the form of lease to provide services on the immovable property for a short period of time, then it is considered as an operating lease. So let us understand what are the key characteristics that defines the operating lease. To be classified as an operating lease, the lessee must have certain requirements that should be fulfilled under GAAP, that is generally accepted accounting principles. So an operating lease is treated like renting lease. Payments are considered as operating lease. I'll repeat again, an operating lease is treated like renting. Uh, Renting as in the leasing payments, which are considered to be like operating expenses. Assets being leased are not recorded on the company's balance sheet. They are expensed on the income statement, so they affect both operating and net income. It is retained by lessor during and after the lease term and cannot be on a bargain purchase option. The term is less than 75% of the asset estimated economic life, and the present value of the lease payment is less than the 90% of the asset's fair market value. Further explaining and due to crime crunch won't be so possible. So let us understand the advantages and the disadvantages of the operating lease to conclude our topic on operating lease. So let us go through the advantages. I'm so sorry. The biggest advantage of the operating lease is that it allows a business to use an asset without having to purchase it. For example, if a business needs several high-powered computer workstation in order to offer services to this customer, it has three choices. Number one being purchase these items outright, often at a significant cost. Purchase these items on the credit, then pay them over a time period of time, like over a duration, and rent these items and replace them at the end of the leasing term. So by renting this equipment via the operating lease, a business can avoid spending a large amount of cash at once. It can also avoid the interest and other fees involved in buying equipments on credit. Finally, the business never actually takes the ownership of the equipment. Let me repeat again. So finally, the business never actually takes ownership of the equipment, that making it easy to replace it at the end of the leasing term. So there are accounting advantages to operating lease, although they can vary on the base of business industries and finances. So we will now focus on the disadvantages of the operating lease. The biggest disadvantage of the operating lease is that the lessee never gains ownership over the leased asset. At the end of the lease terms, they need to return the asset to the lessor and either enter into a new lease of the same asset or purchase a replacement. Over a long period of term, the cost of leasing of an asset can often become higher than the cost of simply buying the asset. However, this can vary between industries and businesses. Finally, another and the last disadvantages of operating lease is that it does not provide the lessee with any option to purchase the asset at a discount. So if a lessee wants to purchase the asset at the end of the lease term, they'll have to typically pay the full market value, or even if the options are available, there are no discounts allowed. Having said that, I would like to end my PPT. Thank you so much.